Hello everybody, this is Fabi from The Next Big Rush, and today I am looking at the price of gold and comparing it to the price of the Junior Gold Miners ETF, also known as GDXJ. I'm going to pull up here the GDX as well, just for you to have an idea of what the GDXJ is doing, also in comparison with the GDX. So let's take a look at that. Here we go. I gotta stop going to Yahoo Finance. I hate it now, but just years of going here. Anyway, so looking at the year-to-date returns, the GDX and the GDXJ are different in that the normal gold miners GDX is really about the majors. It's about the biggest companies that produce gold, and this is the makeup of the GDXJ. So it's an ETF, okay? It represents a percentage of these companies: Barrick, Newmont, Newcrest, Goldcorp, Franco-Nevada, Agnico Eagles, Silver Wheaton, Rand Gold, AngloGold, and Royal Gold. Okay, so really if you're looking to invest money into the major producing gold miners, you can just come here and buy the ETF. I don't love ETFs in general for a few different reasons, but at least this is a nice Rolodex of who is who in the gold miners in the major sectors. Okay, so let's compare this to the GDXJ. What makes up it? Well, Alamos Gold, B2 Gold, the ETF that we just looked at, so GDX is inside the GDXJ, which is something I hadn't even noticed until just recently. IAMGOLD, Pretium, I still don't know, Resources, Kirkland Lake, Torex, Endeavor Mining, Regis, and Silver Standard. Great, and here are the percentages of how they calculate. These are the top holdings. They do have, you know, a few other smaller holdings, but these are the main ones. So looking at the gold price, going back to why I'm making this video in the first place, you see that if we pull up here a year, very clear that what happened is we traded up in the summer of 2016, and this pretty much shadows, or I should say that the junior sector shadows the gold price here in the summer of 2016. Then you have a decrease here towards the end of the year. It sucks for all those who keep track of their net worth and their holdings, you know, on a yearly basis, because you were doing really well, then all of a sudden, boom, 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 down. You're down by a lot by the end of the year, but it's okay. I feel your pain. But if we concentrate on the year-to-date, this is how the price of gold has performed. Now, I am not very knowledgeable at all in technical analysis, but I can tell you that it's pretty clear here that we had a breakout just recently when we went over and above about 1260 something, right? We tried to breach it here, failed, came back, and we kept trying to breach that level, and we did so very strongly just on the 11th, and then we held it. Now, what you would expect is for that price to come down again, and for that previous resistance point to become support. That signals a healthy price if it bounces from it and goes forward and then breaches the new level, which should be closer to 1300 here. People like round numbers for some odd reason, and so seeing it reach 1300 and hold would be super important. You can ask any sort of technical analysis person about that. This is just very basic. This is like TA 101. So what you haven't seen is the GDXJ do that. I mean, look at this. We haven't even breached the highs of February. Heck, we haven't even breached the highs of when gold broke out. It's almost like gold broke out, and at the same time it started to diverge from the junior gold miners. Let's see what the GDX tells us. Yeah, it's pretty much the same story. Look, gold broke out here, and then almost instantly the gold miners, the majors, started to drop. That is very interesting to me. And what I mean by interesting is that, I don't know, maybe this is a good buying opportunity, because as I just showed you, in the summer, those two had a very decent correlation, as they should to a certain extent. You know, I mean, we're talking about mostly producers here. Not all of these companies are going to be producers, but most of them are, especially in the GDX. These are all producers. You would see that the price of gold goes up and the makers of the stuff also go up, right? I mean, that's just common sense. And this is the reason why most of us have gotten into the sector in the first place, you know, because we want a leveraged bet to gold. I would like to know your opinion on this. Do you think that this is sort of a great opportunity to buy, or do you think that the weakness in the gold miners is due to a general weakness in stocks versus gold? Because we have to remember, at the end of the day, gold is money. And I'm not trying to make a political statement, although I don't really mind making political statements. I'm just saying gold is the stuff that a lot of people run to when they see political crises, when they see wars starting to break out, when they see uncertainties, market crashes, etc. That is gold. But stocks are stocks. Even if they are gold producers, they're still stocks, and they might be just as sensitive to the general stock market as, you know, blue chip companies, right? Sometimes even more so, because they're that much smaller. So let me know what you think. Is this last chance to buy gold miners before they take off and start correlating with gold? Or do you think that this is the beginning of a downturn in stocks in general, and this is going to be a much better buying opportunity in a few weeks or months? Let me know what you think in the comments below. I think I'm going to start buying some gold stocks. And when I do, I'm going to come back with a video to tell you which stocks I am buying this month. So keep an eye and ear out for that. If you like this video, hit like and subscribe, because there's a lot more coming your way.